This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on March 16th, 2012. Our time is 8:42 Mountain, 10:42 Eastern. Radio show runs AM 640 in Toronto, 630 CHED in Edmonton, QR 77 in Calgary. If you ever miss a radio show, catch us online, Harold's website, HESradio.com, HESradio.com, also archived on his website, rarecoloreddiamonds.com, and the shows are now podcasted. You can be a part of the podcast with our radio show. Just go to HESradio.com. Housekeeping note, next week in Edmonton, the Oilers are playing an early afternoon game, and our radio show will be on at 10:30 in the morning Sunday. So 10:30 in the morning Sunday. We're on a little later in Edmonton on Sunday due to the Oilers, and that's happening for this show. And next week, it will happen again. Harold, it's been a very interesting time since the beginning of the year. Gold and silver made some major runs. And now we're starting to see a little bit of volatility, some consolidation, and people waiting for quantitative easing 3. We know that quantitative easing 3 is coming. Bill Gross was on CNBC talking about interest rates when the Fed kept interest rates where they are earlier in the week, and he said QE3 is coming. It's just a matter of the timing. And truthfully, I was watching Bloomberg. They had another money manager analyst on saying fundamentals for gold and silver have not changed one iota. The fundamentals are still exactly the same. We're just into a time where people are a little euphoric on the stock market. And Harold, a lot of it seems to be based around Apple. When you take Apple's earnings out, you take the fact that Apple is increasing in price every day, you take them out of the mix. The stock market in the United States and the earnings in the United States are actually not that great.
No, they're not. But don't forget this is an election year, so everything is supposed to look much better in an election year. Obviously, President Obama wants to get reelected. They're making the job numbers look better, trying to make the housing numbers look better. But again, it's not. And we know it's an election year, so the markets are going to remain very volatile, and this week was no different. Gold actually is trading, as we're taping the show today, we've traded at a high of 1,660, traded at a low of 1,639. Right now, the market's at the high of the day, very close to it. We're trading at 1,658. Now, there's very heavy support in gold at 16 and a quarter and 1580. Now, again, it wouldn't surprise me to see the market test these lower levels as we did during the week. But again, I do anticipate that they'll bounce off of it. The silver market just went positive on the day, traded at a high of 32.82 at a low of 32.07, and we're now at 32.66. Trading close to the high of the day. But again, I do anticipate that the markets will be very volatile, again, for the next quarter or so, and the closer we get to the elections. Oil market has held in very strong. We're trading at 106 oil as we speak. Oil market's up 65 cents on the day. There's very heavy support in the market at $100 and then at 95. But the major resistance is at 110 and higher. Now, we're very, very bullish on oil. We're very bullish on gold and silver, but the markets will remain very volatile, realizing that this is an election year and there are situations happening in the Middle East. The U.S. dollar, that's the major concern at this point. As the U.S. dollar trades, so does gold. And basically, as soon as the U.S. dollar breaks above the 80-cent level, then the market starts to sell off, and that's what we saw during this week as the U.S. dollar got close to 82 cents, which is a very dangerous price. Because, again, a breakout above the 82-cent level would cause gold and silver prices to fall a little bit further. However, once we did get close to 82 cents, the market did back off, and as we're trading the show right now, the U.S. dollar is down 45 points or about a half a penny and is trading right now at 79.79. Again, these resistance and support levels are extremely important for short-term trading, but again, over the long term, we do anticipate that the U.S. dollar will continue as one of the weakest currencies, and that's why we do feel that gold prices eventually will get above 2,000 and possibly substantially higher than that. So the U.S. dollar right now is trading and it's fallen today below the 80-cent level, which is a very good sign. As the U.S. dollar continues to fall, it will push gold and silver prices substantially higher. The Canadian dollar is stronger than the U.S. dollar. So even though the U.S. dollar has gained a lot of strength over the last week, backing off a little bit on Friday, the bottom line is that the U.S. dollar is only really stronger against the euro, and the euro is a disastrous currency. So again, how good is the U.S. dollar actually doing? It's really not doing very good. I was at a wedding in the Caymans at the beginning of December, and the Cayman dollar was worth 20% more than the U.S. dollar. So my feeling is that as long as the Federal Reserve continues to print more and more U.S. dollars to pay debt, it's inevitable what has to happen. Weak currencies mean high inflation. High oil prices mean high inflation, and high food costs mean high inflation. At a time when people are not doing as well is a very dangerous time to be in an inflationary economy. However, the reason that we recommended hard assets for the last decade was exactly what's happening at this point and where we're heading. $106 oil is not cheap oil. However, even without a problem in the Middle East, which we have many going on at this point, but even with no problems in the Middle East, there would be no doubt that over the next year to 2 years that oil would go to $150 or higher. Just on the fact that there's major shortages in the oil market, they can't get to the oil that they want, and the world is using much more oil. However, as the prices go higher and higher, it's primarily right now, primarily because of what's happening in the Middle East and the fear that Iran and Israel and the United States could go at it. One thing that you should realize, though, is that the governments do play an important part in the market, and again, with this being an election year and, with the fact that in the United States, gas prices are getting close to $4 a gallon, and now that's not good for re-election for Obama. The fact is that they will play with the oil markets, and the way that they do that is to release the strategic oil reserves, which they've done in the past. Now, this is really only supposed to be done for warfare. However, the Obama government seems to be using this as a ploy to bring down oil prices, and that's a short-term solution to a long-term problem, which is shortages in the oil market. I would be very bullish on oil. I am very bullish on oil. And then we have the situation in the Middle East. You got Yemen, in trouble. You've got Syria. All these situations in the Middle East are a hotbed, but the biggest one is Iran and Israel. Again, there are people that have feelings that think that Iran will back off. I just don't see any way in the world that that's going to happen. Iran hates the United States, hates the entire West, and the fact is that they will use oil as a weapon, and they are strategically located on the Strait of Hormuz that could shut down the passage of oil into the Persian Gulf. So there's a lot of scenarios going on at this point that are very bullish for hard assets, gold, silver, diamonds, those type of investments. What you're seeing in the paper asset markets, the futures market where gold and silver are most heavily traded, it's a totally different scenario to what the mainstream investors believe is happening in the metals markets. I know myself that I've owned gold and silver now for over 20 years. For over 10 years. I started buying gold when it was at $250 when the show first started. I started buying silver at $4, as did many of my clients. Now, again, we've seen gold go from $250 all the way up to $1,900, back down to $1,650 that it's at right now. But again, volatile markets trade like that, and if gold's going to get to $2,000 to $3,000 to $4,000, these type of price movements are important because the market will not hit that in an orderly fashion. There are going to be days when gold's going to go up $100, $150, and $200. You just have to make sure that you're in the market at that point. Same thing with silver. Silver is very volatile right now. We first started buying silver at $3.80 about 10 years ago. It hit a high of 50. Now it's back down to 32 and change. I think a tremendous buying opportunity. Silver not only responds to inflation and world problems, but also is a very heavy industrial metal that is extremely important. So I would be a major buyer of silver at this level. Could it drop to $28? It definitely could drop to $28. But the bottom line is that we're not trading this market. The people that are trading the market get annihilated in this market. When you're trading futures and the market trades the way that it is, the fact is that 90% of the investors lose their money when they trade the very heavily leveraged futures markets. We've never recommended that. In fact, we remain very conservative on the market and recommend the exact opposite, which is owning the physical metal. Because by owning the physical gold and silver market, the fact is that there are no margin calls because you're not in the heavily leveraged futures markets. All you want to do is ride out what's upcoming. And what's upcoming is massive inflation, and there's no doubt about that is going to happen. In Europe, what's happening is that they're printing money like crazy to support Greece and Italy and Spain and Portugal. Now, the fact is they've had a bailout for Greece. It's not going to work. There will be another bailout, and I highly doubt that would work either. So basically, the sovereign debt situation in Europe is getting worse and worse. And by printing money in order to bail yourself out is just a short-term situation. It's like putting a Band-Aid on open-heart surgery. Eventually, that's going to collapse, and so will 5 or 6 other countries in Europe. They're all intermingled bank-wise, derivative-wise. It's a catastrophe waiting to happen. Some of the most brilliant minds in the financial world are saying the same thing. They're heading towards financial collapse, and that's why we're saying that to own insurance on that situation. You know, the fact is that if you're sitting in all paper assets at this point, you're in a very dangerous situation. Right now, with the elections coming up in November, the markets are favoring the paper asset market because, again, the numbers are showing or trying to show that the economy is improving. I'm a Canadian living in the United States, and I can assure you that is not the case. The economy cannot get better on $106 oil. Now, again, if the government does release the strategic oil reserves and drops oil back down to $90, $95, it's only a short-term situation. It doesn't take away from the bullishness of that market. They've done this before. I've traded oil for over 30 years, and believe me, I know what happens when they release these strategic oil reserves. The market will fall $10 or $15 short-term and then come right back up again. It's only a strategic ploy to bring down the market in an election year to make the president look better. There's no doubt in my mind the President Obama will get reelected. He's got the money, and again, he's got the momentum, but I can assure you that things are not getting better in the United States. And again, we need to stay in the investments that we're in because I feel very strongly that gold, silver, and diamonds are the avenues that will make the most amount of money over the next 4 to 5 years. And as these markets go through their cycles, as gold goes up and down, again, we're not trading this market. We're in the market for the long term. Most of us and a lot of us have been in it for the last 5 to 10 years, have done extremely well. What we've got is an opportunity right now with the U.S. dollar trading where it is to buy undervalued gold and silver. I think silver at $32 is a steal. We've seen it at $50 last year. I think the market's not only going to surpass that this year, but possibly next year go into the $60, $70, $80 range, and we do believe that silver will be a triple-digit metal. So again, we feel that the metals and the markets will remain very volatile. It's not unusual in an election year for this to happen, for them to posture to make the economy look better than it is. And don't forget, when gold and silver prices are high and oil prices are high, that's not good for the overall economy. However, gold hit $1,900, silver hit $50, and oil hit $150, and it hit it for a reason. It just didn't go there arbitrarily. There are reasons why the market hit those levels, and there are reasons why the market will go back to those prices. So again, if you believe that inflation is coming, if you believe that the paper asset markets have the opportunity to crumble like they did in 1999 when the dot-com companies went under and everybody lost all their money in the dot-coms. Then on top of that, in 2008, when the stock market dropped from 14,000 down to 6,500. That may not happen this year because, again, it's an election year, but 2013 looks very, very scary. What we are predicting this year is tremendous volatility because of the election year, but we do believe that gold will break above $2,000 this year. We do believe silver will break above 50. We do believe oil has a very good chance of trading anywhere from $150 to $400, depending on how severe the situation gets in the Middle East. We're recommending to buy physical gold, physical silver. Don't over leverage your positions. Don't trade futures and options. You'll get killed in those markets, and we do like oil very much. Again, it will remain volatile, so we don't want you to leverage it, but we have recommended in the past and still are recommending an ETF, an exchange-traded fund called U.S. Oil, USO, and that's the one that I do recommend a trade that will give you the opportunity to capture the upward movements in oil, especially if something happens with Iran and Israel, and that could cause oil to almost overnight go to $200 to $300.
Since 2001, gold and silver, they have resumed their role as a store of wealth, protecting you against the decaying purchasing power of paper money. Central banks around the world printing money. Stop the destruction of your paper wealth by investing in hard assets like gold, silver, and diamonds. So you want to turn your paper assets, some of them anyway, into hard assets for real wealth. In a portfolio, maybe 5, 10, 15, 20, 25%, it's up to you. The people to speak to about starting your own precious metals investment account is Worldwide Precious Metals. That's the company Harold recommends you use. They're a Canadian company. They've been in business over 10 years, the entire time this bull market is run. And we can't stress enough, they are the experts. This is all they do. And they're more than happy to help you start your investment account today with precious metals. Call 1-866-623-2002, 1-866-623-2002, or go to their website, www.pmc.com, www.pmc.com. Speak with him about receiving the World Financial Report on Radio newsletter, free of charge. We send it out via email every week, and this week is a must-read. We say that a lot, but it's the companion to our radio show. This is the information that Harold and I use. You'll be on the same page that Harold and I are on, and you can go through this information in 10, 15 minutes or spend hours if you want. It's up to you. But it's important you get our newsletter. In fact, in our charts of the week, we have gold and silver seasonality. And you can take a look at the seasonality of gold and silver and get an idea of now would be a really good time to get involved in these markets based on seasonality. The telephone number, 1-866-623-2002. The website, www.pmc.com. In our newsletter this week, we have our charts of the week, quotes and quick hits, information on diamonds, gold, silver, the sovereign debt crisis, U.S. debt and deficit, the Fed in the United States, banking, jobs, oil and gasoline, real estate, China, and geopolitical. Get our newsletter every week. And when you talk about the fundamentals behind this market, let's take a quick look. As Harold mentioned, sovereign debt crisis, not solved. In fact, people are already after, if you can believe it, already after Greece got a bailout, they're talking about them leaving the euro. In fact, John Embry said this week, there's no question that the whole Greek situation is hopeless. Central planners can paper it over in the short term and say what they want, but the Greek economy is destroyed. Ultimately, I think there's no choice but to leave the euro and reintroduce the drachma. That from John Embry from Sprott Asset Management. Sovereign debt crisis not over. In fact, in our section of the newsletter on sovereign debt, they're talking about Portugal possibly needing a bailout. There's concerns about Spain, and in a past newsletter here in the last few weeks, we had a story about Ireland needing another bailout. This is why you need that insurance policy in your portfolio, precious metals. Let's talk about interest rates in the United States. This week, the Fed met, kept interest rates at 0 to 0.25, and that's going to continue. They reaffirmed until 2014. That is a huge positive for hard assets. They were talking about QE3. They've sort of backed off. Would they like to not go ahead with it? I honestly believe they don't want QE3, but they're going to be in a position where they have to do it. Bill Gross, I normally don't watch CNBC, but when it comes to their coverage of the rates being raised or lowered in the United States, they do an excellent job. I was watching and listening to their panel. Bill Gross from PIMCO was on there, and he said, QE3 is coming. It's just a matter of the timing. Somebody challenged him, and he said, this is not what we're asking for. This is what we're seeing happening. Low rates, QE3, that's a positive for precious metals. Also, the U.S. debt and deficit situation has not been solved in the United States. As we touched on the last show, the United States continues to run record deficits. It can't continue. 2 months in a row, the U.S. has added about 200,000 jobs. But let's be honest, there are questions around those job reports. You can read the information we have in our newsletter in the job section where people question how they're using seasonality. In fact, some people even say that a lot of these numbers are almost borderline made up, trying to cheerlead the economy and help out the stock market. But let's go on the fact, let's say they are accurate, 200,000 for the last 2 months, roughly per month. In the past, David Rosenberg from Gluskin Chef in Toronto said you would need 400,000 a month for 5 to 7 years to get back to where you were in the past with all the jobs that have been lost. And then you move to housing. The housing bubble obviously broke, and values continue to go down. In fact, it's going to get worse here in the next couple of years because they stopped the foreclosures after the robo-signing scandal. Now that has somewhat been settled. Now we're going to start seeing a whole bunch of foreclosures come on the market again and drive down the price of homes. And then, as Harold touched on, geopolitical. You take a look at geopolitical, and without a doubt, that is the scariest scenario right now, and that is Israel and Iran having a war, and you would definitely want to have an allocation of precious metals in your portfolio if that happens. That's why we're saying contact Worldwide Precious Metals. Speak with them, 1-866-623-2002, 1-866-623-2002. Rick Rule from Sprout Asset Management said this week in regard to oil, for whatever it's worth, the world is out of $60 oil and maybe out of $70 oil, meaning the oil that needs to be found in those ranges does not exist anymore. But the world is certainly not out of $100 to $150 oil. To that extent, there continues to be debasement of currencies as well. Those numbers will continue to rise, meaning oil, the easy oil has been found. The oil that costs more to get out of the ground, the $100 to $150 oil, it's there now, but you add in the currency debasement, oil prices will go higher. Kyle Bass, who is a money manager, and you can actually read this story in our newsletter, he recommended to the Teachers Pension Fund in Texas that they take delivery of $1 billion of gold. You can read the article and see an interview with him in our newsletter. We have the link. Why he had the University of Texas take physical delivery of $1 billion in solid gold. And he actually said, and was quoted in this article, the pattern is set. We're going to continue to see monetize fiscal deficits by expanding central banks' balance sheets. I call it creating money out of thin air. Nigel Farage, he was interviewed by King World News, and he said this week, and it's very interesting, surely we have learned the lessons back in the 70s that if you artificially create money, you create inflation. Inflation is a disease of money that is caused by central banks and governments acting imprudently. When you look at the creation of money, central banks printing money the way we are, whether it's Europe or the United States, okay, we're now talking about deflation and downtimes, but one of the other worries is what happens if we turn the corner on this? Just what kind of inflation pressures are stoking up by the printing press? No one quite knows the answer to this, but history suggests that it will not be pretty. And Harold, we have about 3 minutes left in this segment. We are in a time where we need to be very, very diligent. Don't get lulled into a false sense of security. And that's one of the things I'm worried about this week. There seemed to be a lot of cheerleading for the stock market. Oh, we've turned the corner, and the stock market, hey, look, it's booming. And yet if you really take a look at the big picture and look at the fundamentals, they're not strong. And you can read all about it in our newsletter. And as I mentioned right off the top of the show, a lot of what's happening in the stock market is based on a few stocks. If you're not in those stocks, you're not moving up. And Apple is one of the prime examples of that. It's actually skewing the numbers based on what it's doing, but that's one company. And let's face it, one company in the United States doing well, that's nice, but it's not going to help the housing market, the jobs market. It'll help them make more money when they sell the new iPad today, but beyond that, it's not a quick fix for the U.S. economy by any means.
No, it isn't. And again, we just got to realize that there's reasons for everything that happened. There's the trend is your friend. There's a reason why gold is trading where it is in silver and oil. And oil. And it's because we have these geopolitical situations and, again, inflation on the horizon. And that's what we need to concentrate on. We don't want to be confused or be confused about where it's really going on. There is no doubt with what's happening in Europe that we are going to have massive inflation, and that's the same with the United States. So, again, very bullish on gold and silver and oil. Diamonds look amazing. We're in great shape at this point, and again, don't get lulled into a false sense of security.
The telephone number to invest in precious metals, 1-866-623-2002, 1-866-623-2002, the website, wwpmc.com, wwpmc.com. In our newsletter, our chart of the week, one of them in the gold section is from Jim Grant. He writes the Interest Rate Observer in the United States. Warren Buffett and Coca-Cola investors have been humiliated by gold. Read this article. Get our newsletter from Worldwide, 1-866-623-2002, wwpmc.com. And he goes on to say that Warren Buffett is obviously has turned out to be not a fan of gold, and yet he should have been in gold because gold has done better than Coke, which he talks about all the time, and you can actually see the chart in our newsletter. There was another analysis done on Warren Buffett slamming gold a few weeks back we had, and to paraphrase, the money manager said, "We don't really care how we beat the market. We just want to beat the market. And it doesn't really matter to us what the name of the investment is, as long as it gets us to where we're going." And Harold has been saying that for years and years and years. That's why I included it in the newsletter a few weeks back. And that is the case. Now is the time to have an allocation of precious metals in your portfolio for all the things we've mentioned in the first half of the show. It's the time to do it. The telephone number, the experts to speak to, the one company Harold recommends, Worldwide Precious Metals, wwpmc.com, 1-866-623-2002. Come back and talk about diamonds as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on March 16th, 2012. Our time is 9:09 Mountain, 11:09 Eastern. Radio show runs QR 77 in Calgary, 630 CHED in Edmonton, AM 640 in Toronto. The company Harold recommends you use when it comes to investing in precious metals, a company that has been in business for over 10 years. They're not Johnny-come-latelys. They're the experts in this very specialized market. They're named Worldwide Precious Metals. The telephone number to connect with them, 1-866-623-2002. They will go through all the different ways there are to be involved in precious metals and have an allocation in your portfolio. And the website for Worldwide, wwpmc.com, wwpmc.com. Harold's website for diamonds, rarecoloreddiamonds.com. His auction site is hsfineauctions.com. We don't have an auction date yet for the next auction. When we do, we will let you know. If you'd like to speak with Harold about rare colored diamonds, the telephone number 1-800-432-1022, 1-800-432-1022. Natural fancy colored diamonds embody wealth, beauty, elegance, and all that is most precious and rare in the world today. Learn about investing, collecting in colored diamonds at Harold's website, rarecoloreddiamonds.com. The telephone number, 1-800-432-1022. And it was in November of 2011, Harold launched his website, hsfineauctions.com, and it is the top online auction for, obviously, Harold's investors, clients. And we'll talk more about that in the weeks to come. Our featured diamond of the week, you can find it on Harold's website, rarecoloreddiamonds.com. This week's diamond is a 2.01 carat radiant cut fancy yellow internally flawless diamond. It has its own video. You can see the video online. There's a link to it in our newsletter. It is a must-see. And we have a fantastic article this week to go along with the featured diamond. Colored diamonds, and this is from Reuters, came out last week. Colored diamonds becoming investors' best friend. Yellow, pink, and blue diamonds are catching the eye of investors around the world, according to dealers and industry insiders. Natural colored diamonds make up only 1% of global production, which gives them unquestionable value, according to Bruno Scarselli, who represents the third generation of the U.S.-based colored diamond specialist Scarselli Diamonds. There's a tremendous demand for yellow diamonds, but also blue and pink. He told Reuters at the Basel World Watch and Jewelry Show, there are not enough diamonds to satisfy 1/10 of the new billionaires that every month are created in China. He said as he handled a $9 million ring featuring a 2.5 carat internally flawless blue diamond and 2 smaller pink stones. He says he expects financial institutions to be increasingly attracted to the diamond industry, which has traditionally been in the hands of family businesses. This is associated with the fact that currency is losing its value. Government bonds are at risk and nations are losing wealth. Colored diamonds are piquing investors' interest because they are more difficult to find in nature than white diamonds. And Simon Zion, whose father founded the Hong Kong-based diamond company Derez, said blue diamonds are coveted not because they are the rarest, but because they are not many left in a booming market. Harold, it's a long article. I wanted to read the highlights there. And it's a very positive thing, obviously, when we have a company like Reuters coming out with an article on colored diamonds being an investor's best friend. That's something that you brought to our listeners back in 2005 before everyone else.
Well, that's one of the recommendations I'm most proud of. I've been a collector of colored diamonds for many, many years, for many decades, and they've just proven to be phenomenal investments. But the one problem, with investing in diamonds in general was how do you resell them? And realizing that, and we built HS Fine Auctions, the only online real-time auction site to sell high-end collectibles for our clients, and it's doing extremely well. So we're very, very excited as we create a secondary market to resell high-end collectibles, not only rare colored diamonds, but very high-end gold and silver pieces, rubies, emeralds, and sapphires, those type of investments that, again, we've created a secondary market for our clients to resell, and it's so much fun, and our clients are doing extremely well with it. There's been some phenomenal buys, and everybody seems to be enjoying using the site. We're the only company that has it. Again, I know the diamond market extremely well. I've been through it during the 70s and 80s, and back in 1980, you could have bought a 1-carat yellow flawless diamond for about $500. Now they're $18,000 to $20,000. The fact is that they double in price every 4 years. They go up by at least 25% a year. And in times of high inflation, these are the diamonds that went up 500% in 1979 and 80. It means if you owned a $20,000 yellow flawless diamond, you could see $100,000 back on that diamond if we get a repeat of 79 and 80, which I don't see any way that we're not going to see. There's a major shortage of these diamonds also. You see, it takes such a large amount of production just to find one color diamond. So it takes over 100,000 carats of diamonds just to find one colored diamond. The rarest of all diamonds are red diamonds. Red diamonds, there's very, very few of. Maybe once every 3 or 4 years, one gets uncovered below the Earth's surface, and a red diamond could sell for as much as $2.5 to $3 million for a 1-carat diamond. Those are not necessarily the diamonds that we recommend that you buy at this particular point. What we're recommending are diamonds that are still reasonably priced, but will explode in price over the next 5 to 10 years. Most of our clients that buy and invest in colored diamonds do it for safety, for return, and for retirement. Because if you put your money in the stock market for retirement, the chances are you will never retire. Because what happened in 1999 when the markets plummeted, we all remember Nortel dropping from $150 down to below $1. Those type of things will continue to happen in the markets as different cycles happen. But in the rare colored diamond market, there are so few of them available. Many of the major mines that produce these diamonds are no longer producing, and that makes these diamonds even more valuable. So you want to own a yellow flawless diamond for profit and for safety. It's the only asset you can cross a border with. It's the only asset that could be sold in another currency. If the currency wars continue the way that they are, to own a diamond that we could sell for you in Japan for yen, in Europe for euros, in Britain for pounds, in China for won. Wherever the dollar is strongest, wherever the currency is the strongest, we can hold auctions and sell our clients diamonds. And at this particular point, with the fear of the world currency markets collapsing, and again with inflation and everything just around the corner, this is one of the best investments that you could ever make. They never ever go down in value because there's so few of them. They double in price every 4 years, and tell me another investment that will do that with absolutely no risk. The other thing is that, again, it's portable private wealth, as Europeans call it, real estate in your pocket. You could literally walk around with $1 million, $5 million, $10 million in your pocket in the form of a diamond, and nobody would even know it. But try to cross a border with more than $10,000 in cash in your pocket and see what happens. We're recommending yellow flawless diamonds while you can still get them. What we did is we bought out the entire supply of rough diamonds last year. After we cut and polished all of them, 99% of them were not the type of diamonds that we would sell to our clients. Investment yellow diamonds have got to be flawless, and that's all that we offer to our clients are flawless yellow diamonds, and we actually produce and cut 90% of the world's flawless diamonds. They all go to my Canadian clients. So when we cut and polish these diamonds, then we send them to the Gemological Institute of America in New York, where they go through a full grading service. They actually tell you every single thing about that diamond. When it was graded by GIA. It goes over the 4 C's, the carat weight and the color, and everything about that diamond. It tells you the size in millimeters. It even has a diagram in the lower bottom part of the GIA report that shows you the shape of your diamond, a hologram of it, and it will show you in red where the imperfections or inclusions are. In the case of our diamonds, they're all flawless, so you'll see a perfect diamond, and that's all that we deal in, are the highest quality. Now, again, we're not saying to go out and buy $2 and $5 million diamonds, even though we do have those diamonds available. What we think is that over the next 5 to 10 years, it's the yellow flawless and the argyle pink diamonds that will increase in price substantially, and percentage-wise will outperform almost any other asset that's available today with absolutely no risk, because there is no risk to owning a rare colored diamond. They never, ever go down in value. And again, as far as resale goes, we own HS Fine Auctions, which will sell your diamond for you. That's how we actually make our return, is when you sell your diamond through us, as we get 10% of the profit of what you make on that profit. So, for example, if you buy a yellow flawless diamond today for $20,000, and 5 years from now that diamond's $100,000 and we sell it for you, you make an $80,000 profit. We get $8,000 and you get all the rest. So we own HS Fine Auctions, which stands for H. Siegel, fineauctions.com. It's just an amazing website that I purposely build to resell my clients' diamonds and high-end collectibles. And again, this is a service that is reserved for my clients. So if you have bought diamonds from other dealers that are copying what we're doing, hopefully they'll be able to sell those diamonds for you. We do not sell their diamonds, as they really get the diamonds that we reject. So we only deal in the highest quality diamonds, and that's what we deliver to our clients. We deliver these diamonds directly to you. You own them outright. We don't hold them for you. You own them. We ship them directly to you. We pay the shipping, the insurance, and the duty coming into Canada for you, and the diamond comes delivered directly to your home or address where you want it to come to. We've talked about the yellow flawless diamonds. There's many different colors of yellow. We have some diamonds starting now at $14,000, $15,000, some beautiful, fancy, light yellow flawless diamonds. In fact, last week we featured a beautiful, I believe it was a 159 oval, fancy light yellow flawless diamond. It was absolutely stunning. It looked like it was over 2 carats, and that diamond sold this week. The week before, we offered one of the most beautiful diamonds ever, a 240 fancy vivid yellow internally flawless diamond, and that diamond sold also. This week, we have something extremely special also. To get a diamond that's over 2 carats is nearly impossible. In fact, only one diamond in 15 million is over 2 carats. That's how rare they are. And then try to find one that's this color, fancy yellow, which is one of the best colors you can get, and that it's internally flawless. So this particular diamond is extremely rare, very beautiful, over 2 carats, which is, again, in this day and age, almost impossible to get. And these are the type of diamonds that we recommend that our clients purchase. When you get into these larger numbers, these 2, 3, 4, and 5 carat diamonds, they take on a life of their own, and they sell at auction for absolute fortunes. So look at the featured diamond this week. It's a 201 radiant cut, fancy yellow, internally flawless diamond. The diamond will do tremendously well investment-wise, and again, only one diamond in 15 million is over 2 carats, and I can assure you hardly any of them are this beautiful yellow, which is a 9 out of 10, and internally flawless, which is nearly impossible to get. We've talked about the yellows. We've got some of the most beautiful, fancy light yellows, which are known as canary diamonds, and we've got a few of them that we cut that are so beautiful that are on a scale from 1 to 10, 9s and 10s, and those diamonds are in around the $15,000 and $16,000 range, depending on the size. We also have the fancy yellow, fancy intense yellow, and fancy vivid yellow internally flawless diamonds, and these diamonds are the most sought-after investment diamonds you can get. And again, all of our diamonds on a scale from 1 to 10 are 9s and 10s, and they're all internally flawless, and that's what you want to own. The other diamonds are the rare diamonds from Australia. Australia has a mine called the Argyle Mine. This was discovered in 1985. It produced a tremendous amount of diamonds, 30 million carats of diamonds a year. But most of those were low-grade industrial white diamonds. Argyle is most famous for their pink diamonds, and pink diamonds are absolutely stunning. If you've never seen one, go on our website, go to the loose diamond section, and look at some of the most beautiful pink diamonds in the world. Now, the Argyle mine that produces these diamonds is going to close before 2018, which is 6 years from now. Give it 2 years for all the diamonds to run out, and these diamonds can go for 10 times what today's prices are. So we're recommending that you buy these diamonds and invest in them while the prices are low, and a diamond that you could buy, for example, for $30,000 today could be a $300,000 diamond in 10 years from now. There's very few investments that will give you that type of return with the safety that we have in the rare color diamond market. And again, we saw this happen with other diamonds, with blue diamonds. The reason that blue diamonds, and Randy brought this up at the beginning of the diamond section, have skyrocketed so much in price is because they're almost impossible to get. It's now going to become the same thing with pink diamonds. And then these prices start to take on a life of their own, and they start going up 100, 200% in a year. So you want to buy these diamonds and invest in them while the prices are low, and that's now. So even though we have red diamonds, which are the most sought after and rarest diamonds in the world, very few people even know those type of diamonds exist. I own 10 of those diamonds. They're spectacular. Blue diamonds, green diamonds, pink diamonds, yellow diamonds, orange diamonds. These are all extremely rare. Now, we have some additional diamonds coming out very soon. We've got some magnificent orange diamonds, gray diamonds, violet diamonds. Keep in touch with our website, rarecoloreddiamonds.com, because, again, we post our diamonds as they come out of GIA, as soon as they get graded, and then we video them for you so you can see every aspect of the diamond. Now, during times of high inflation, these are the investments that went up 500% in 2 years. And again, with the currency markets the way they are, oil prices skyrocketing, and also food prices, again, you don't want to buy these when they've already made these gigantic moves. You want to buy them while the prices are low. Again, we'd rather you buy the diamonds at $20,000 and sell them at $100 than buy them at $50,000 or $100,000. Now, some of you may say, who's going to buy these diamonds when the economy is rough? There's still thousands and thousands of millionaires around the world and hundreds of billionaires around the world. There's still a lot of people with a lot of money, but the savvy money, the smart money, is going into the hard asset market, which is gold, silver, and diamonds. And diamonds are the safest investment you can get involved in. They never, ever fall in price.
Speak with Harold about diamonds. His website, rarecoloreddiamonds.com. rarecoloreddiamonds.com. The telephone number, 1-800-432-1022, 1-800-432-1022. Take a look at the featured diamond this week. It's a stunning 2.01 carat radiant cut, fancy yellow, internally flawless diamond. You can see the video at rarecoloreddiamonds.com. There's a link to it in our newsletter. Also, stop by hsfineauctions.com. Take a look around and get yourself accustomed to the website, and we will announce the next auction date. It will be coming up very, very soon. Also, get the newsletter from Harold. The reason I mention that, lots of good information in the newsletter this week about diamonds. We have the story Colored Diamonds Becoming an Investor's Best Friend from Reuters. Also, there's a story about the reluctant heiress who had jewels tucked away. In fact, she had a 9-carat pink diamond ring that they're going to sell at auction for $7 million tucked away. And that's the beauty of this market. You know, you have somebody tucking away a beautiful pink rare diamond, and hundreds of years later it comes out and it goes up for auction. And we have another story about Sotheby's, their auction featuring a lot of colored diamonds in Hong Kong. So get the diamond section of the newsletter. Harold will send the newsletter out to you. Connect with him at rarecoloreddiamonds.com. The telephone number, 1-800-432-1022, Harold. We can't stress enough, though, that we will let everyone know when the next auction is, because you definitely want to be a part of it.
You better believe it. It's a phenomenal auction. Everybody really enjoys it. It's very exciting. You know, it's not like an eBay auction or any other type of auction where there's no selling. I sell every single piece personally. And again, when we come on the site, it's very exciting. It's very motivational, and everybody seems to love it. The other thing that we've been working on that is pretty well ready to go, it'll be out in the next 2 weeks, is our online seminars. So we have a phenomenal seminar for rare colored diamonds, and we make it available for free of charge. And the fact is that it will tell you everything about the rare colored diamond market. We go through even cutting a diamond. We show you a 3.5-month process of cutting a colored diamond, which is really interesting, and we reduced it down to 2.5 minutes. We also did the same thing for setting a ring. So if you're an investment group, if you're a bunch of people that get together and make investments together, if you just want to learn about, and you're serious about it, want to learn about investing in the rare colored diamond market, contact us, and we will do a free online seminar for you. It lasts about a half an hour, but it tells you every single thing that you need to know about the rare colored diamond market, how to invest. It includes GIA reports and how to read them and everything you need to know. We're very excited about this. We put a tremendous amount of work into it, and within the next couple of weeks, we will be starting these online seminars. It's something we've been working on and very excited about. So again, if that's of interest to you, if you're serious about investing in the rare colored diamond market and want a full seminar, we'll be more than happy to do that for you free of charge.
RareColoredDiamonds.com, the website, telephone number 1-800-432-1022, Harold's auction site. And it was started in November of 2011, hsfineauctions.com. We will announce on probably our next show or the next couple of shows when the next auction will be. To invest in precious metals, and Harold, we have about 3 minutes left in our show here now. To invest in precious metals, the telephone number 1-866-623-2002. There's only one company that Harold recommends you use when it comes to investing in precious metals. That is Worldwide Precious Metals. Their website, www.pmc.com. Telephone number 1-866-623-2002. Should mention for those that listen in Edmonton, show in Calgary, Edmonton, and Toronto. For those that listen in Edmonton, the next show on March 25th will be Sunday at 10:30 in the morning. We'll be on before the Oilers pregame show. And Harold, it was a week where we saw a lot of volatility in the market, but with a couple of minutes left here, to me, in my mind, and nothing has changed one iota. When you go through the list, sovereign debt crisis still a problem. Interest rates are still low. That's a positive. QE3 more than likely still coming. U.S. debt and deficit a problem. The jobs not great in the United States. Housing not great. And then you have the geopolitical specter over us, which is Iran versus Israel. This is a time where people still need to be very aware and very diligent about their investments. Don't get lulled into a false sense of security or confidence, because the truth of the matter is maybe, yes, things are starting to turn a bit of a corner, but we need to be very, very diligent.
You bet. I think you summed it up beautifully, Randy. Again, don't let your guard down. Nothing has changed as far as the outlook to the marketplace is. Again, we're very bullish on oil, gold, silver, and diamonds. That's the area that you should have your money invested. And again, I think we're going to get through these very difficult times and do extremely well with those assets.
Thank you very much, Harold Siegel.
It's my pleasure. I wish everybody a wonderful weekend and a very profitable day.
One story I wanted to touch on quickly before the end of the show, and this was out of the United States, and I'm sure it is definitely the case here in Canada as well. It was from CNN, and Bloomberg had a story on it as well. Retirement scare. 60% of workers have less than $25,000 saved.
That's scary.
I know. It is very, very scary. Concerns about job security and piles of debt have left American workers more pessimistic about retirement than ever. Only 14% of workers feel very confident they will have enough to live on comfortably in retirement. 38% of workers say they are somewhat confident, and 23% not confident at all. But the scary number is that 25%, roughly 60% have 25,000, and if you 30% have 1,000. $1,000 saved. That's what this radio show is all about, as Harold has talked about for 10 years. Helping the little guy out, helping the little guy invest and make money for retirement. Speak with Worldwide about investing in precious metals, 1-866-623-2002, the website wwpmc.com, or speak with Harold about investing in diamonds. Help your retirement, help your financial situation, rarecoloreddiamonds.com or 1-800-432-1022. You can get our email, our free weekly email, our newsletter, free of charge every week from Worldwide or Harold. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.